Okay, folks, this video is designed to give you some guidance on drafting your financial plan for the business plan assignment. So before you begin, you want to make sure that you watch all accounting related videos. If it has something to do with accounting, you want to be sure to watch it, including the Accounting 1 video, the Accounting 2 video, the break-even stuff, my short video on why your variable cost is never zero, all of those videos. Once you do that, you just are going to follow a simple 6-step plan in order to develop your financial plan. The first thing you're going to do is develop a listing of your startup costs. And this includes everything that you're going to need to purchase prior to opening the business. And you want to make sure that those costs are accurate. So if you can't locate pricing online, you want to be able to use your best guess. Something else that you could use is AI to help you brainstorm a listing of startup costs, and also the competency assignments, the SBA cost calculator, and there is one more that relates to financial planning that can be helpful here, and I'm trying to remember what that is. It might be about your startup costs. Yeah. Anyways, so you want to make sure that you take a look at those competency assignments and develop those startup costs. And remember that nothing should be listed as zero. If, for example, you own your car and you're going to use your car in your business, well, your car, the value of your car is going to be listed as an asset. And then corresponding on the capital side, that same value is also going to be capital in the business. So you want to make sure that nothing is zero anywhere. Step 2, you're going to classify your costs either as assets, expenses, liabilities, or capital. Using that car example, your car is both an asset and it also represents your investment in the business, so it's capital as well. And you're going to use those classifications to develop your opening day balance sheet. Step 3, develop the opening day balance sheet. You're going to list your assets, liabilities, and capital on the opening day balance sheet. No expenses on the balance sheet, just assets, liabilities, and capital. Assets go on one side, liabilities and capital go on the other side, just like the accounting equation. To determine your cash balance, you are going to subtract the cost of your assets from the amount of capital you invested, and the difference is going to be what the cash that you have in the business. And then you're always going to want to make sure that your balance sheet balances. If generally what happens is that you either have too much cash or too little cash, or you have too much capital or too little capital. And so if you need help with that, feel free to reach out, but you definitely want to make sure that that balance sheet balances. Step 4 is to develop your sales forecast using the top-down or bottom-up method. Most of you are probably going to be using the bottom-up method just because top-down is something that you would generally use in some kind of like mass product where you're selling something to a giant target market or an unsegmented target market. Remember that the format of your sales forecast is different than the Salsaholics narrative. The Salsaholics narrative is me giving you a case study, and your sales forecast is you telling your audience the steps that you went through in order to determine what your first year sales is going to be. And once you have that sales forecast, that determines your revenues for your income statement. So next step, income statement. You're going to list your revenues and monthly expenses on the income statement. Just revenues and just monthly expenses. No assets and no capital and no liabilities. The income statement is revenues minus expenses, and that gives you net income or net loss. And you're going to do an income statement for your first 12 months. Next up, statement of owner's equity. You're going to start with your beginning capital from your balance sheet. Remember that you don't include liabilities, you use the beginning capital only. And then you're going to add net income or net loss. And you want to remember to include considerations for taking draws or adding additional capital. And then the last step is your break-even calculation. You're going to want to refer to the break-even lecture and the break-even problems in the lecture for the specific calculation. If you need help with the break-even point, I am happy to help you. There's also calculators online that you can use. You're more than welcome to use those. And just remember that your variable cost is never zero. Oh, that was the competency assignment that I was forgetting a couple slides ago. There is a competency assignment about determining your variable cost. That would be a great competency assignment to do in order to prepare you for the financial plan draft assignment. And so that's it. For additional information, remember to review those lectures and videos, also the course readings, see my examples and templates in the business plan resources folder, and then also review the Salsaholics solution. And happy drafting.